The article discusses about the foreign capital influx in the Indian financial sector, Indian banks, uh, insurers, and NBFCs, especially at a time when India's net FDI has seen a sharp moderation. Major financial institutions like Dubai's Emirates, NBD, Blackstone, Zurich Insurance, and Canada-based Fairfax have shown special approvals, keen interest, and active steps to engage to invest in the Indian financial sector. For example, Blackstone has announced the acquisition of 9.99% stake in Kerala-based Federal Bank. Uh, According to McKinsey, the reasons as highlighted by McKinsey and Company is that banking industry in India is the largest sector by net income, generating $46 billion in 2024 with a 31% year-of-year growth. High profitability is one of the major factor for attracting such global capital. Additionally, India's revenue growth is expected to be healthy in both retail and wholesale banking as financial sector penetration deepens. There are robust credit demands from small businesses, retail consumers, and housing. There is enough resilience in the Indian financial sector that include low exposure to tariff hit sectors, deleveraging by companies, and a focus on secured retail lending. Then there is also a vast, untapped, rapidly expanding financial market with the underbanked population of 400 million, which is currently relying on informal credit system, and government is pushing uh, uh, rapidly pushing to the digital infrastructure led financial mainstreaming. Then there is also steps taken by government in like GST rationalization and cut reduction, while which will increase retail credit demand and would anchor the financial sector of India. Then there are relaxations in terms of the restrictions on the foreign ownership in insurance and private sectors. For example, with the approval from the respective regulators, foreign companies can now go up to foreign 100% ownership for the insurance companies and 74% in the private banks. Thus, this shows a welcoming nature by financial sector regulators towards the foreign capital, control, and compliance that stay under Indian regulation. Then there are series of serious steps taken by Indian banking regulators after the aftermath of collapse of ILFNs, DHFL. Uh, Due to these active steps by the regulatory bodies, many mid-sized private banks and NBFCs have shown reasonable growth, making them potential takeover targets. Lastly, there are some other reasons, for example, which analysts believe for the stability and of the Indian financial sector and acting as a major attraction point. For example, a large economic offering scale, political stability, vast consumer base, and credible regulatory oversight. Uh, for overseas investors, India provides both geographic diversification and future profit potential. In comparison to India, China's financial sector is tightening, and there are enough global geopolitical risks which make India a natural alternative for global capital. There are certain concerns towards this inflow of foreign ownership. Uh, for example, even if the regulation remains Indian, the new owners will have more say in the strategic decisions of the bank or the insurance company, which may not always align with the domestic policy goals, especially during the crisis situation. Also, final foreign ownership exposes India's financial system to global shocks. For example, Lehman Brothers fall in the 2008-9 global financial crisis, which led to tremors reaching through to India also, but which was it was largely insulated due to low foreign ownership of the low foreign capital and ownership of the Indian financial sector. Domestic private banks and NBFCs operate under tight capital and compliance norms, and hence foreign capital owned entities which have access to cheaper global funding may distort this level playing field. Thus, there is need for active regulations and uh, balancing and creating a balance between atmosphere which can help in attracting foreign capital as a major driver of economic growth versus creating adequate regulation to avoid any major financial crisis in the upcoming future. We must understand that there is need for capital in banking, insurance, and credit delivery uh, as India races towards a $7 trillion economy by 2030. The such interest by the foreign players in the Indian financial sector is a test for India to ensure that this inflow strengthens its financial independence and stability.